Hi, this is Dan Collins coming to you live from Traders Expo New York. I'm joined with Emil van Essen from Van Essen Trading. He has a Van Essen MLP Energy Fund. And Emil has been one of the most innovative CTAs out there for a very long time. He created a spread trading program that was one of the first actual program that took advantage of the Goldman Sachs Commodity Index roll. And are you still operating that program?
Yeah, we're still operating it. It started off trying to take advantage of the massive amount of money that was in long-only commodities. And we were able to sort of front-run the roll as they moved their positions. But we expanded that. We found there's lots of opportunities to earn alpha in the commodity space by looking at the term structure, you know, the forward contract months and the relationships, and also through relative value, you know, between crack spreads and the different prices between different related commodities.
Yeah, and I believe when this was going out that there were so many shorter term traders on the floor that were bear spreading in front of these rolls that you would be able to take advantage of this massive movement that was sometimes even bigger than the roll itself.
Right, so there was, you know, there turned out being hundreds of billions of dollars rolling their positions at a predictable time. And the guys on the floor would take advantage and go in a couple days ahead of them to front run them. And we figured, hey, we'll just front run everybody and go in like a week or weeks in advance and take advantage of it. And essentially you're just getting in front of a huge movement of money through the market.
And it was huge, and I think you said by doing this you would actually have two cracks at the apple maybe in front of one roll.
Yeah, because there was so many front runners trying to get ahead of this money, we just had to get ahead of them and then get ahead of them also as they were exiting the trade. So if they're selling ahead of the people rolling their position, they also have to get out by buying back their spreads, and we would get in front of them on the buyback too.
Yeah. Well, so many people who have been successful in this industry have been successful because they were trend followers, or they're following, you know, they're seeing someone else be successful and they're repeating it, which is always good. The trend is your friend, but when so much money is in one direction, that can be dangerous.
Yeah, so I think when too much money follows the same strategy, people will naturally try to take advantage of it. We've always tried to come up with unique strategies that nobody else is doing and really target a real alpha as opposed to just having a beta product that's sort of similar to everybody else's.
Yeah, and then you expanded that a little bit. It's so interesting because everything you've done has been, it seems, new. It's how do you approach finding an edge in a market, or is that simply what, you know, the core of what you're doing?
Well, as an example, we saw a lot of people doing short-term trend following. And we said, well, wait a second, in commodities, short-term trend isn't very accurate. It has some value, but it's not that accurate. The term structure, the movement of the term structure is better at predicting. So how the term structure or the spreads move in crude oil is a much better predictor than the trend. So we said, well, if we're the only ones doing this, we're going to start following this and have a unique product that's actually more accurate than what other people are doing. And that technique still works today.
All right, well, Emil, thanks for joining us. Looking forward to see the next great innovation come. This has been Dan Collins, live from Traders Expo New York.